All right, let's talk about something pretty wild. What if I told you there's a system out there that claims you can turn $100 into $10,000 just by trading crypto? Well, today on The Explainer, we're going to tear that claim apart and see exactly how it's supposed to work.
I mean, that's a pretty bold promise, isn't it? It definitely gets your attention. The idea that there's a complete, repeatable system for growing a tiny account into something substantial. So you know what we're going to do? We're going to pop the hood and really see what makes this thing tick.
Okay, but before we go any further, let me be super clear about something. This is absolutely not financial advice. What we're doing here is simply breaking down the logic, the mechanics of this one particular strategy based on what the source material tells us. So, with that out of the way, let's get into it.
All right, so Section 1, decoding trading leverage. You know, the first piece of this whole puzzle, and honestly the part that trips most people up, is a little thing called leverage. Think of it as the key that unlocks the door. The thing that supposedly lets a small-time trader play in the big leagues.
So what is it? Simply put, it's using borrowed money to take a bigger position. Now, I know what you're thinking. When most people hear the word leverage, they immediately think danger, risk multiplier. And look, they're not totally wrong. But this system looks at it completely differently. It reframes it. Here, leverage isn't just a gamble, it's seen as the necessary tool that gives you access to the capital you need to even make a properly sized trade to begin with. And this right here, this is where you see that huge shift in perspective. On one side, you have the common view. Leverage is a dangerous bet, pure degen gambling. But on the other side, this systems view sees it as a necessary tool for making smart, calculated trades. The argument is actually pretty profound when you think about it. If you already know exactly how much you're willing to lose before you even click the button, then leverage isn't really multiplying your risk, it's just the key that turns the ignition on the trade. It completely changes the mental game. Okay, let's make this real. So picture this. You found the perfect trade, but the position size you need costs $679. Problem is, you've only got $100 in your account. You're stuck, right? Well, not with leverage. According to this system, you apply 25x leverage and bam, the capital you actually need to put up to enter that trade, your margin, is now only $27. All of a sudden, a trade that was totally out of reach is now possible for a small account.
Okay, so leverage gets you in the door. It lets you take the trade. But how do you actually make money? That's the real question, isn't it? Well, that brings us to Section 2, the trader's profit formula. This is the core math, the engine that makes the whole system go. Because let's be honest, without the right numbers, leverage is just a faster way to blow up your account.
Now this table is kind of the aha moment of the whole strategy. Seriously, look at that top line. If your wins are 4 times bigger than your losses, a 4-to-1 risk-reward, you only need to be right 21% of the time just to break even. Let that sink in. You can be wrong almost 80% of the time and still not lose money. This is the whole secret sauce. You don't have to win all the time, you just have to make sure your wins are way bigger than your losses.
And this quote really nails it. Trading, when you strip it all down, is about 2 things. Your win rate, yeah, but also how much you make when you're right versus how much you lose when you're wrong. It's that simple. It's a math problem. It's not about having a crystal ball and being right all the time. It's about getting the balance of those 2 numbers right. That's the foundation of everything.
Now this is a really cool little psychological hack. Instead of thinking in dollars, which can get super emotional, right? This system has you think in R, or risk units. So a loss isn't you losing $10 of your hard-earned cash. No, it's just a 1R loss. It's a weighted attach to take the emotion out of the equation so you can focus on one thing and one thing only, executing the system perfectly. The whole idea is, if you get the process right, the money just becomes a byproduct.
All right, so we've got the big ideas down. Use leverage as a tool, not a weapon, and focus on trades where your potential wins are huge compared to your losses. That all sounds great, but how do you actually find these trades in the wild? That's what Section 3 is all about. Let's get into the nuts and bolts of the actual system.
So the entire strategy really runs on a 3-piece toolkit. First, you've got a trend indicator. Its job is simple. Make sure you're swimming with the current, not against it. Second, you have the good old Fibonacci tool. This helps you pinpoint smart places to jump into that trend. And third, a proprietary calculator that does all the heavy lifting on the math side, figuring out exactly how big your position should be.
So here's how a trade gets set up, step by step. First, you wait for a break of structure. That's just a fancy way of saying you've confirmed a new trend is starting. Once you know which way the market is heading, you pull out that Fibonacci tool. to find the sweet spots for a potential entry, kind of like finding the perfect moment to buy the dip in an uptrend. Then you set your entry orders at those key levels. And this is so important. Your take profit and your stop loss are all figured out and locked in before you're even in the trade.
And here's where that custom calculator becomes your secret weapon. You plug in the numbers, your account size, where you're getting in, where you're getting out if you're wrong, and it just spits out the answer. It tells you exactly how big your position needs to be to risk, say, exactly 10% of your account. This is huge because it takes away all the complicated math. And maybe more importantly, it takes away the chance for you to mess it up. Your risk is managed perfectly every single time.
Okay, so you've got a system for finding and taking trades. That's great. But how do you actually manage the money to grow the account from $100 upwards? Well, this next part, Section 4, lays out a very specific plan for that.
The growth strategy is built on 3 simple rules. Rule 1, start with an amount you're genuinely okay with losing. No stress. Rule 2, every time you have a winning trade, you skim 25% of the profit off the top and put it in a reserve fund. And Rule 3, after you take a loss, which you will, you use that reserve fund to top your account back up. It's basically a shock absorber for your account, designed to smooth out the ride and protect your ability to keep compounding.
And really, this is what it's all about. It's not about hitting one massive, life-changing home run. The whole point is to build a process, something gradual, something you can scale, and something that's actually sustainable. According to the source, this kind of discipline is the difference between slow, steady growth and the classic boom and bust cycle that wipes so many traders out.
460. That's the number. And that's a number that really puts things into perspective. Based on the model behind this strategy, it could take about 460 trades to grow an account from around $925 to that $10,000 mark. So yeah, this isn't a get-rich-quick thing. Not at all. This is a long-term, systematic grind.
And this quote really brings it all home, doesn't it? The money will come if you perfect the system. It loops right back to that core idea we talked about. Stop chasing the money. Instead, focus on executing the process, the system, perfectly. The idea is that if you nail the execution, the money is just a natural consequence.
So that's the thought I want to leave you with. After digging into all of this, it all boils down to one big question. When you're trying to build wealth with a system like this one, what's really more important? How much money you start with, or how perfectly you follow the system? Something to think about.